Hello and welcome. Today I'd like to introduce you to a revolutionary new concept in life insurance by describing new ways policy owners can access their death benefits to help them achieve new levels of financial security. For hundreds of years, life insurance policies only paid out the death benefits when the insured died. The insured, who was often also the premium payer, considers their life insurance policy to be an expense. They themselves will never spend a penny of the death benefits. Not anymore. For the first time in the life insurance industry, you're able to tell your clients something they've never heard before, and that is this. If you don't die prematurely, you may be able to spend your entire death benefit on virtually anything you want. Because of this revolutionary change in the way life insurance death benefits can be accessed, your clients have the opportunity to view their life insurance policy more like an asset than an expense. That's the concept that's revolutionizing the life insurance industry, and AIG is leading the way. How does this all work? We're going to talk about how American General Life's innovative Asset Protector can help increase your client's sense of financial security during retirement. The basic principle is to understand your client's financial life spectrum. Depending on how long they live, people have the potential to experience 3 financial phases during their lifetime. Let's start with the first phase. Prior to retirement, while focused on your career and raising your family, most people are working on building their assets. They're paying their bills and setting aside as much as they can for retirement. In many cases, their number one concern is the fact that they haven't had enough time to build significant assets, and therefore, if their most feared risk, premature death, were to happen, their family would be in serious financial trouble. Throughout time, we've helped resolve this problem with life insurance. If a primary breadwinner dies prematurely, the death benefits will make sure their family can still be financially secure. But the next thing you know, it's time to retire. For many people, this will be somewhere in your mid-60s to early 70s. You've built up your nest egg, your children are grown and living on their own. As a retiree, your financial concerns tend to change pretty dramatically. You're no longer concerned about replacing your income or paying for your children's college education. You're most concerned about, how am I going to get from my retirement to age 85? To survive that period of time financially, you need to protect the assets you've built. And for many retirees, the biggest risk to their assets during this phase in their life is a significant illness that would require expensive care, either at home or in a nursing home. This could result from physical problems such as a debilitating stroke to cognitive impairments such as Alzheimer's disease. To help protect your assets from the devastating impact of those healthcare expenses, American General Life makes available its Chronic Illness Rider. If you meet the rider's criteria regarding cognitive impairment or the physical inability to care for yourself, you can access your life insurance policy's death benefit while you're still alive to pay for those healthcare expenses, preserving your retirement assets for your surviving spouse. If it weren't for this safety net, your retirement portfolio could be drawn down significantly during one spouse's period of care, leaving the surviving spouse with very little after you're gone. But one day you realize that A, you didn't die early, and B, you didn't succumb to a chronic illness. Everyone's celebrating as you blow out the 85 candles on your birthday cake. At this point, your financial concerns tend to change once again. You're not concerned about death or sickness, but rather, how is my investment portfolio going to last as long as I do? When your top concern becomes, what happens if I live too long? Your answer becomes American General Life's longevity insurance. This optional rider says that if you've met the criteria of the rider, at age 85, you can begin receiving 10% of your death benefit each year for 10 consecutive years. With a $250,000 policy, that can mean access to an additional $25,000 per year. With a $1 million death benefit, you could receive up to $100,000 per year for 10 years. Imagine what that could do for your financial security at a time when your retirement portfolio could be straining to generate the retirement income you need. So, Whether you're in a phase in your life where you're most concerned about dying too soon, living too long, or getting sick along the way, American General Life's Asset Protector has a package of benefits that can help. A life insurance policy, a chronic illness rider, and a longevity rider, with the flexibility to select the right combination to help your clients achieve their financial goals. One solution that can play an important role in your financial plan throughout all three phases of your financial life spectrum. Here we've only briefly touched on the three major components of the Asset Protector strategy so that you can see what a powerful financial tool this can be. To learn more about the details of each of these three components, look to American General Life.